In the orchestral chaos of global finance, one note rings louder than ever. Common sense appears to be the latest casualty in the cacophony of economic decisions. In a world where selling retail air conditioning units in Siberia seems rational compared to the financial maneuvers in Washington, Matthew Piepenburg, partner at Matterhorn Asset Management, dissects the disconcerting dance of fiscal irresponsibility. As nations drown in record debt, political posturing, and ignored economic indicators, the alarming question emerges: are we witnessing the demise of common sense in economic governance? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. The comedy of errors, economic absurdities unveiled. The not-so-funny facts. In a tragic comedy, the United States, once a bastion of economic might, finds itself traversing treacherous terrain. While politicians virtue signal on trivial issues, the nation grapples with a staggering 120% debt to GDP ratio, soaring interest rates, and a bond market signaling an impending recession. The air is thick with debates about hard V's. Soft landings while the average citizen faces credit card debts at unprecedented rates. Dying beyond our means. America, it seems, is not living beyond its means, it's dying beyond its means. As economists engage in wordplay, the ominous reality of prolonged yield curve inversions, declining GDP, and mounting bankruptcies paints a grim picture. The debt spiral tightens its grip, reminiscent of historical precedents where recession struck months after similar economic indicators. Navigating the fog, economic ironies, and distortion. Our own opinions, not our own facts. As the fog of misinformation thickens, the struggle to discern truth from distortion intensifies. While opinions may vary, the stubborn facts remain yield curve inversions, declining M2, and ominous signals from leading indicators hint at a recession already underway. The irony is stark as the Federal Reserve manipulates data while the economic ship sails perilously into uncharted waters. A foreseeably bad Treasury auction. Enter the Treasury auction, a seemingly mundane event with profound implications. Uncle Sam's attempt to sell 30-year treasuries resembles a lemonade stand in the Arctic. Few buyers show up. With global central banks shedding U.S. treasuries since 2014, demand wanes, prices fall, and yields rise. The recent auction, where primary dealers had to purchase a quarter of the unsold bonds, underscores a troubling trend. Interest in U.S. treasuries is plummeting. The unraveling thread: debt, interest rates, and inflationary pressures. When billions are no longer enough. More alarming than the lackluster auction is the revelation that a $24 billion bond sale bought the U.S. only 5 days of liquidity. As deficits soar and the nation hurtles towards recession, the debt-driven model becomes unsustainable. The traditional buyers of U.S. debt, banks, pension funds, and foreigners face increasing pressure for USD liquidity, perpetuating a vicious cycle of rising interest rates and falling U.S. dollar value. The open need for more inflationary liquidity. The looming question: can Uncle Sam's bond market survive without a massive infusion of liquidity? As the debt endgame unfolds, the only option may be a rendezvous with quantitative easing QE on an unprecedented scale. In a desperate bid to keep the debt-ridden system afloat, the Fed's money printer may become the last lifeline, with consequences that echo through the annals of economic history. The echoing drumbeat of change. In the symphony of economic discourse, dissonance grows. The collision of debt, interest rates, and inflationary pressures points towards an uncertain future. Whether one subscribes to the belief in a resilient dollar or foresees its inevitable decline, the undeniable truth is that the economic orchestra is playing a tune fraught with complexity. As the world watches the drama unfold, the lingering question remains: can common sense be resurrected in the corridors of power? Or are we condemned to witness the unraveling of economic sanity? What is your perspective on the current economic landscape? How do you envision the interplay between debt, interest rates, and inflation shaping the future? Share your insights below. Share your thoughts in the comment section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.